So how does Verizon work? Well, Verizon is a major player in the telecom space, offering 5G coverage on top of arguably the best 4G coverage nationwide, helping them to grow substantially as a telecom. During the first FCC auction of spectrum, they offered higher frequency C-band spectrum in the range of 3.7 GHz to 4 GHz. In Verizon's case, they bought C-band spectrum with an average 161 MHz with 3,511 licenses, way more than AT&T's 1,621 licenses and T-Mobile's 142 licenses. This C-band spectrum is mid-band and will provide a good balance between reach and speeds for Verizon. The idea is that this is a bit faster than your average C-band spectrum, so I think by this Verizon is trying to have faster Wi-Fi, however it will not reach as far as some of the other competitors who are buying C-band at this time. Verizon has converted thousands of towers to 5G as part of their C-band deployment. Their high-frequency 5G is fantastic. This is what they call the 5G millimeter wave. This offers Verizon near 1500 megabits per second in certain cities, in download around 711 megabits per second for upload, according to Verizon. Of course, real speeds may vary. This is on the spectrum that is 24 GHz and greater to support this high speed across short distances. Be aware that this high frequency can sometimes struggle to penetrate buildings and other obstructions to get the fastest speeds. Verizon, with higher speed 5G, can focus on their new initiative, 5G Home Internet. This home internet service can provide very reasonable home internet without fiber optic services. Fiber optic costs around $40 a month for the base, around 300 megabits per second, and this would be for download and upload, and this is only if fiber optic is in your area. The goal of 5G home internet is to offer home internet for as low as $25 per month, and you should be able to get similar speeds. However, your upload may not be as good as fiber optic, as that's what fiber optic is known for. Be aware that if you don't have a Verizon mobile plan, that it will likely run you about $50 a month with autopay. If Verizon can expand its 5G coverage, which has grown from under 1% in 2021 to about 12.77% nationwide, according to Whistleout, this service can be provided to homeowners in the market of AT&T and other internet companies, which could give them a serious run for their money. AT&T does not participate in 5G home internet at this time, whereas T-Mobile does. However, to many, T-Mobile's home internet solutions are not considered worth the hassle, with people reporting notably lower speeds near DSL 1 megabit per second at times, which is really unacceptable compared to other internet services such as cable. This 5G home internet could save people a lot of money. However, T-Mobile seems to be flexible on offering their 5G home internet, whereas Verizon is careful to only offer the service to people who they can provide high, reliable speeds. Verizon's market cap is around $198 billion, making it a large cap stock on the border of being a mega cap stock, and the company was founded in 1983. It's funny how At&t Corporation was the beginning of a lot of these telecoms though, and how Verizon by market cap is worth more than At&t currently, despite the Verizon being created from At&t Corporation during the split up in 1984. Verizon was born from Bell Atlantic and NYNEX prior to Verizon's acquisition of GTE to create the Verizon we know today. So how is Verizon staying competitive? Well, like I said earlier, the company is focusing on its 5G rollout and also its 5G ultra wideband, which has a goal of being offered to 175 million people by the end of 2022. The competitive speed at which their ultra wideband is offered is astounding, and we will talk about it more in the industry analysis. Now let's analyze the industry. AT&T leads with the most market share, around 44.8% according to Statista, and Verizon is second with 29.1%. T-Mobile has grown with its Sprint merger, giving it a 24.9% market share, and US Cellular seems to only have around 1.2% of the market share. AT&T has grown in market share while Verizon has lost market share. Verizon and AT&T consistently advertise and offer similar plans, where both companies are fighting to keep market share from the typically cheaper alternative, T-Mobile. I'm concerned that this price competition could drive AT&T and Verizon to lose wireless subscribers and struggle to grow market share in the long term. However, AT&T and Verizon are working to provide better quality 5G to compete with this competition. Now, how is Verizon going to compete with T-Mobile and AT&T? Well, Verizon is growing its coverage, like I mentioned earlier, for 5G, and they still hold substantial 4G LTE coverage to provide good service as they migrate to 5G. T-Mobile has the most 5G coverage currently with 53.79% of the US covered according to Whistleout. At&T has 29.52% of the US covered for 5G, and Verizon has 12.77% covered. US Cellular, once again, has a much lower 1.8% covered for 5G service. In terms of speed, the telecom industry is very competitive, but only the biggest three telecoms have been able to perform. Verizon has the fastest maximum speed by far at around 2,216 megabits per second, and T-Mobile comes in second, and for overall average speed, T-Mobile wins. At&T is similar to Verizon in what speed they offer on average, around 98 megabits per second versus Verizon's 93 megabits per second. This begs the question, why is AT&T and Verizon so far behind on average, but Verizon is so far ahead in max speed? It comes down to the spectrum that the companies have implemented to use their 5G. Verizon has the highest frequency 5G with their millimeter wave, and this has given them an edge over the competition. This offers limited coverage due to the higher frequency, but if this is implemented in more locations, the average speed will increase and Verizon might be able to take over the lead from T-Mobile. Verizon's price to earnings is a relatively fair 9.18 compared to a Verizon competitor, AT&T, which trades at a price to earnings of 8.16. Verizon's PE is higher than AT&T's, which is interesting at this time. However, AT&T just spun off Warner Media, and so the earnings will likely be lower and result in a higher PE, so that isn't concerning at this time. The Dow PE currently is around 18.8, while Verizon trades at a much lower PE, and that can help suggest that there is an undervaluation of Verizon on the stock market. However, telecoms tend to trade at lower PEs, and the historical PE for Verizon is near 12, which can suggest that there is an undervaluation of Verizon on the stock market. And for price to book, we have a different situation. Verizon's price to book is high relative to other companies in this field. Currently, Verizon has a price to book of 2.33, and compared to AT&T's, which is a price to book of 0.75, Verizon has a high PB. This is once again justified in my view because AT&T has yet to reflect their spin-off of Warner Media on their price to book. Verizon's price to book is quite low relative to the past PBs, near 4, which is great. I also want to note that this is a low PB relative to the S&P 500 PB of around 4.4 currently. However, this is near the PB of the S&P 500 during the dot-com boom, and remember, the lower the PB, the better. According to the debt to equity, Verizon has a higher ratio compared to its peers. Verizon's debt to equity appears to be near 1.64, while AT&T's is around 9.7. This isn't concerning in my view as Verizon has a large debt load but is all low interest on average. The company understands the risks of its debt, and the debt has decreased in recent years by about 6%, though this is in my view not enough, and the company should look to pay down more debt in the near term. In fact, if they reduce their dividend to pay down more debt, I wouldn't mind. Lastly, for the return on equity, we can see that Verizon has an ROE of 26.59%, while AT&T has an ROE of 9.37%. With Verizon having a higher ROE than AT&T, this can help suggest that Verizon is handling its capital better than AT&T with higher returns on its equity. In terms of the intrinsic value, the company seems to offer an upside to 34% due to the strong free cash flow from the past 10 years. After projecting the next 10 years of discounted cash flows from the past 10 years of cash flows with a perpetual growth rate, essentially the expected growth rate of the economy, of 3% to be conservative, and a discount rate or expected rate of return on investment of 10%, the company has an intrinsic value of $63.97 per share, relative to a recent trading price of around $47.61 per share. Now, there are multiple ways to calculate the intrinsic value, and this is just one way, so please keep that in mind. I also want to note that the company's earnings as their free cash flow, EBIT, and net income appear to be generally positive over time. This seems to be due to the increasing wireless subscribers that the company has and their competitive growth in 5G as we discussed earlier. Verizon doesn't buy back its own stock according to the shares outstanding appearing unchanged. When a company buys back its own stock, the book value increases and the intrinsic value increases as there are less outstanding shares in the market. However, this should only happen when the stock is believed to be undervalued, because the money can otherwise be reinvested back into the company for growth, research, and acquisitions instead. In this case, Verizon pays a large dividend and they're focusing on 5G growth. From this, it makes sense that the company isn't repurchasing stock. In terms of dividends, Verizon currently pays a dividend equivalent to a 5.54% annual yield, with a quarterly dividend of 64 cents per share, so $2.56 per share per year. This is good as the company is trying to distribute some of their extra funds to their shareholders. Like I mentioned earlier, the company could reinvest this money, however, they are clearly determining that this money is extra and can be distributed to the shareholders without harm to the business. So overall, what do we think about Verizon? It appears to be undervalued at the time of recording in my opinion. The company has a relatively low price to book relative to the past PBs and a relatively low price to earnings for the time. The intrinsic value is higher than the current trading value of the company's stock, which is ideal, however other intrinsic values may suggest otherwise. Over the long term, I expect the earnings of Verizon to grow with continued 5G growth and continued advertising among other factors. Verizon offers a large dividend and they do not buy back stock at this time. This dividend also appears to be safe as the company has a very high free cash flow to afford this dividend, however they may lower this dividend in time in order to pay down more debt.